Welcome to the Cryptocurrency Odyssey Show. The Cryptocurrency Odyssey Show highlights the latest news on cryptocurrency, blockchain technology, disruptive technology, economics, and world events. They interview top thinkers and entrepreneurs in the industry, and they cover topics like Bitcoin, technology developments, investing, trading, and ICOs. As our world keeps getting more and more digital, cryptocurrencies are changing along with it. Okay, audience, here's the host of Cryptocurrency Odyssey, Matt Leach.
Hi, listeners. Welcome back. Today's show is another update to our show about strategies for cryptocurrency and the strategies you can use to make money with cryptocurrency. Now, this is what it could mean to you, so listen carefully. We're going to talk about the complexity of working with strategies in order to get us all more educated about this activity for cryptocurrency. And my co-host today is Noah Leach, our current expert on this subject, and he'll be helping me educate all of us about this. Hi, Noah. How are you doing? Good. Now, here's a quick description of one situation with cryptocurrency, and again, it's an attempt to bring some light into the area of funding your account with cryptocurrency and trying to avoid pitfalls like we've seen in the cryptocurrency market as of late. Now, cryptocurrency could be an economic path to freedom if you work it right. And first, a quick review of what we'll talk about. One of the things that keeps coming up in my cryptocurrency path is liquidity. It's an important item to use when deciding how and what to invest in the crypto market. Bitcoin is the most liquid cryptocurrency on the market at the present time. Liquidity refers to how easily an asset can be converted to cash while maintaining its value. The concept of liquidity is important because it can determine whether traders can enter or exit a trade at the desired value. The crypto market moves fast, so traders need to be able to move in and out of positions quickly. It's very volatile. This means that there has to be both supply and demand for the cryptocurrency, so market participants can buy at the best price and secure a profit when they decide to sell. You don't want to buy an asset that maybe has great potential, but it's not being traded and it's just stagnating. So if you're sitting on it and you're at the mercy of the market, actually. So a lot of the head of the business development at Allnodes said that. A crypto hosting provider, when measuring liquidity, it can be helpful to look at trading volume or how much cryptocurrency has been bought and sold, as well as investors' overall interest in the asset. So that's just a quick path to freedom for you to use if you know how to use it, and that's what we're going to talk about. So now that we got that out in the open, let's talk to Noah about the difference between dividends and staking crypto as far as liquidity goes. Do you have an answer for that one, Noah?
Well, dividends, we'll get to that here in a second. That's going to be a little bit different because that's more for publicly traded companies on the stock market. But anyways, staking is how cryptocurrencies create liquidity for their crypto. You know, like if you stake Bitcoin, you get a little bit of APR per year back, right? You know,
okay,
like 2 or 3% or whatever the exchange that you're staking through gets or gives you, you know, and they get a little bit of that too. So you holding on to that cryptocurrency and staking it on somebody's exchange or platform or whatever you want to call it is how they create liquidity, so they can then go out and make some money. And, you know, as we saw with like Voyager and stuff like that, staked coins were then used to get loans through actual banks and used as collateral. And that's something that, you know, we've talked about before, but that's pretty much what staking is, you know, you're putting your money in and telling them that you'll keep it there for a certain amount of time in exchange for a percentage or a return on your money. And that's kind of what dividends are too, but only on the stock market. Dividends are based off of how much money a company that is traded on the stock market profits per quarter. And dividends are a great way to build wealth slowly, because especially if the company is known every quarter to make a profit, and then they give you a percentage of that dividend or they give you a percentage of their profit every quarter. And that's how dividends work. Of course, you have to hold those shares that the company has out there on the market for a certain amount of time as well. So like if you notice that there are traders that go out there and they look for stocks that are dividends only, and then they'll buy those stocks close to the dividend date. But if you do that, you only get the dividend from the time that you bought to the time that the dividend is given.
Right, is paid.
So you don't get the full dividend that like everybody else would get. Like if you held it for an entire quarter and then the dividend was 28 cents per share, and you had say 1,000 shares just for simplicity, or 100 shares or whatever, you'd make $28 or $280 for each for those 100 or 1,000 shares that you held for that entire quarter.
So what's the advantage of that then?
Well, the advantage is that a lot of exchanges, like let's say Webull, for example, when you're talking about dividends, they will give you the option to either get that money paid out to you in like a check, or deposited directly into your account, your trading account, or might direct deposit it into your bank account. Or on the flip side, you can just have that money go straight to buying more shares of that company. So you can, those dividends can then you can increase your position in that company, and then the next quarter, if they have a positive quarter where they make profit, you can get more money, a little bit more. And people, that's a strategy that people will do, especially if you have money, or you want to build money and you're starting real early, like you're starting at 18 years old, and you hold that for 20 years, you're going to make some money, especially if it's a profitable company. And not all companies give out dividends, but like I can see if cryptocurrencies come out as like what Coinbase is publicly traded. So if more exchanges like Coinbase were to become publicly traded, I could see them eventually doing dividends, and then staking and dividends would be two completely different things, which they are now. But since we're talking about both of them, staking is just that you're not getting a certain percentage of their profits. You're getting that APR or APY every month or every year, which you'll probably notice daily that your incurred interest that you're getting off of your staking is increasing every day, or the amount that you're getting is increasing every day. But that's just based off of how much you stake. And some places will give you the option to get that money immediately, or they'll only give it to you at like the end of the month or the year or whatever it is, whatever their agreement is with you for staking.
Okay, that makes a lot of sense, though. But I was looking up some items on staking, and they said that you've got to be careful of the validators. You have validators to deal with when you're staking, and if the validator is not doing his job, or the company, I guess the cryptocurrency company, doesn't feel like he is, they can basically fire him, which puts your profit in peril. Is that true?
I don't know too much about that because I've never staked anything myself, so I've only looked into it and read what it is. And for me, staking isn't something that I would do,
Okay.
I'm more along the lines of, trading the crypto daily or something like that would be more my forte. But I don't know if that's true or not. I would assume that once it's staked on there, the validator doesn't like own this. They just make sure that the coins that you are saying you're putting in are what you're actually putting in, as
Right.
far as I know. So I don't think that that would cause any part of your money to be in jeopardy. But I don't know either. As far as I know, validators just that's all they do is validate. They don't they get a little bit of cash for each validation they do, so
Right.
it's up to them. And as far as I know, it's all automatic. The computers are doing it for them. I don't know exactly how that would be a issue, but then again, I'm not well versed in that part of it. I just know what it is and how it works.
Well, the article I was reading was saying you've got to be careful when you pick a validator because apparently you have the option of picking your own validator. But if they don't do the job and the cryptocurrency company comes back down on them, any assets that they were validating, I guess, you could lose or a certain portion. So I was kind of wondering how that worked, but
Yeah,
I guess
I'd have to look that up. I don't know
we'll have
exactly
to
how that would work.
research that a little more. So, can you use like with cryptocurrency and you can use like a day trading strategy with cryptocurrency, and that's pretty much as with stock trading.
Yeah, yeah. The nice thing about doing day trading with cryptocurrency, which is actually what we're just about to talk about now, so I might as well just get into it.
Okay.
That's that's the easiest way to trade is just day trading or holding, depending on whatever you want to do, whatever your strategy is. But the thing about day trading with stocks and cryptos, it's pretty much the same. The only nice thing about cryptocurrency is that you get your money immediately versus stocks where there's a settlement period, where that settlement period could be anywhere from 2 days to 5 days, depending on what exchange you're using for the stock market. Like if you're using Webull or you're using Ameritrade or whatever, you know, every exchange is, I guess, is what you call them. Every exchange that you'd use, or every different exchange would have a different settlement period. So, like with stocks, you would have to, if you traded in just regular stocks, all right, you buy a stock and then that stock goes up another dollar that same day. Then you sell that stock, make your dollar profit per share, whatever it is. You would then that money would have a settlement period of about 2 to 5 days, depending on the market or the exchange you're using or the provider you're using, whatever you want to call them. Sorry. So then you would have to have more money in your account if you wanted to continue to day trade. So like that money that you just day traded with, let's say you used $500 to buy 100 stocks or 100 shares of a stock. That stock goes up to $6. Now you made $100 and you pull all that money out. Well, now all that $500 plus that $100 you just made are in a settlement period.
So they're tied up.
Yeah, they're technically tied up. You can still trade with that money, but they will give you a warning. Like I've done this a couple times with Webull, where I'll pull out a stock and then I'll go to another stock immediately with that same money. And what will happen is that they'll tell me if I sell this stock within 2 days, I'll get a good faith violation, which could restrict my account. And a good faith violation is what happens when they are pretty much giving you a loan to cover that money that you had, because you might not have another $500 or $600 in your account, especially if your other money's tied up in something else. So you're using money that hasn't technically settled into your account yet. It's still in the process.
Right.
So if you were to take that money and go buy another stock and then sell that stock with that money that still hasn't settled, you get that good faith violation, and then you might end up getting your account restricted to the amount of times that you can trade per day for a certain amount of time. Like I run a cash account, so I don't have to worry about day trade limits or anything like that. All I have to do is worry about my account balance and what has settled and what hasn't settled. And of course, the exchange I use tells me what's settled and what hasn't settled for that. But the nice thing about cryptocurrency versus doing the stock market, is that on, like, let's say Webull, for example, since I have the most experience with them, if I trade cryptocurrencies on Webull, there's no settlement period. I get that money immediately. So then I can go back out, trade. I don't have to worry about good faith violations or anything like that. I just do the trading. And the thing about, I know I kind of got off topic a little bit, but the thing about day trading on cryptocurrency is that, just like in the stock market, you have to find your entry point and you have to find your exit point, and you need to know where you want those two things to be before you make a trade. And day trading is technical analysis heavy. So if you don't have good TA, you're probably going to lose a lot of money, or you might get lucky and make a little bit of money. But people that day trade, they're generally day trading with between $2,000 and $5,000 a day. That way, they don't have to worry about good faith violations or anything like that. And these people, they aren't looking to make thousands of dollars a day. If they do, then good for them. They've gone above and beyond what they want to do. But a lot of day traders are only looking for $250 to $500 a day, which is actually a good amount when you think about it yearly.
Mm-hmm. Yeah, that works out to a good amount.
I think you only need like $275 a day in order to make like six figures, or be at the cusp of six figures a year. So, if you can do that daily, then you're doing pretty darn good. And if you do that 3 days a week or 4 days a week or 5 days a week, you're doing pretty good, So that's the day trading part of it. Another option you could do is range trading, which is where you rely on experienced analysts who give out the support and resistance levels each day. And resistance refers to the point to which the price may rise, and therefore a resistance level is a price above the current price. In contrast, support is where the crypto or the stock could go down to and then bounce. Technically, it's called bouncing off of,
right? Where
the price will only drop so far and then it'll not go farther than that. That's considered a support level.
Yes.
So you could try and trade within that and within those two levels and try and pretty much make money doing that. Or you can do what's called scalping, which is you're looking for trades. You're looking for stocks with unusual volume, like they have more volume than they normally have, or you're looking for a crypto that has unusual volume. And there's actually websites that can tell you about unusual volumes, at least for the stock market. CoinMarketCap could probably tell you about unusual volume for cryptos, but for the stock market, there's one that I use called Financial Visualization. It's finviz.com, and it'll tell you every stock for that day that has unusual volume, that's trading up, that's trading down. And then from there on, you need to know the differences between the different types of trading patterns, because that website uses those trading patterns to tell you what's happening. Like it'll say head and shoulders or something like that, or cup and handle, and you can sort on that website by what you want to look at. And I think that that's a great resource. There's also another one called barcharts.com that you can use, which if you want to go do options or something like that, they actually have a list of options that have unusual volume or stuff like that. So that way, if you want to buy options and try and make quick money on options for that day, you can do that. Or, you can buy puts or whatever you want to do. And those types of websites are great for figuring out what you need to do and how you can scalp a security or crypto. And pretty much what you're doing with scalping is it's kind of like day trading, but you're buying and selling within minutes or maybe within an hour. You're trying to make small amounts of money, but you're trying to do it a lot. So that's how they make their money, is they'll make $5, $10, $15, and they're like, oh, this was a good scalp, or 25, 30. Sometimes they might make $100 or $200 on a scalp, and then they'll be in and out.
So you're looking for to scalp a high volume crypto or stock.
Yeah, ones that are normally seen unusual volume.
Okay.
Like like you can like GameStop, for example. When GameStop was like $1 or $5 or whatever it was before it took off and hit the $300 mark, that would have been something that scalpers would have been looking for, and they probably made out like bandits on that one because of unusual volume. And that's what you're trying to do when you're scalping, is you're looking for those things that are unusual volume. And if you're doing that with the stock market, you got to make sure you have enough money in your account to cover the scalping. Otherwise, you're going to eventually run out of money, and then you got to wait a day or two or whatever your settlement period is for all that money that you made to settle, or all that money that you lost
to catch up.
Yeah,
Yeah.
pretty much.
So if you're scalping with cryptocurrency, though, you get paid right away.
Yeah,
And
as for, I don't know what other exchanges do, but with like Coinbase, I can do that all day, all night. With Webull, I can trade crypto all day, all night. And then another option is high frequency trading, which is actually using a script, also known as a bot, which is just a program that you run in order to trade massive amounts of times per minute, per seconds. A lot of hedge funds and stuff like that use thousands of bots to trade, and they're just trading pennies. They're just trading pennies, and they're making money because as they'll trade like 1,000. Like they'll have the bot buy 1,000 shares of something, then it goes up a penny, they sell, and then they do that all over again hundreds of times a day. And when you're doing that hundreds or thousands of times a day, you start to make some money. But the downside of high frequency trading is that if your program is misaligned, or you don't have it set properly or something like that, you could actually end up losing money because the bots are told to buy low, sell high. But if you mess it up, you could end up buying high and selling low, thus losing money.
Right. Well, you bring that up, and that was something I thought that maybe we should talk about here on the show. The bots there seem to be a lot of bots in cryptocurrency, and there's a lot of groups out there that sell you membership to their bot, and I was wondering how that's really working with cryptocurrency, because it's so volatile.
Yeah, well, the bots will only buy low and sell high depending on what your price is. You got to be able to do a little bit of programming with them. Like there's one out there that you can get for free right now called Frequency Trader, or if you just Google FREQ Trader, then it's usually the first one that pops up. I haven't used it myself. I've been thinking about it, something to mess around with, but I don't know if I want to take that type of risk. Maybe I'll create a different account and put $10 in just to see how it works. That way, if I lose all my money the first time, it'll be $10. It won't be something,
Well, sure, yeah,
that would break the bank. But but those are the dangers. Is that if you have it calibrated incorrectly, you could end up losing a lot of money. There's a lot of people out there. It's actually starting to pick up on like day traders and stuff too, because they're always looking for an easy way to make money. And these bots, since crypto's pretty much 23 hours a day, 7 days a week, you can there's only downtime 1 hour a day. You can trade 23 hours a day with those bots, and if you got it calibrated properly, you can slowly make money doing that. And that might be something that some people might want to look into, but you're only talking about pennies a day, or maybe dollars a day. But if you just let it go, do its thing, and it's set up properly, you could end up at the end of a month having a few $100 extra, maybe a few extra $1,000, depending on how much money you're putting in.
Well, yeah, I would expect to get at least $100 a day if I went to all that trouble. To
Yeah, I
get the
mean,
butt.
it'd have to depend on what you're trading and how you're trading and how much money you're putting in, because obviously that is, that's the main factor in how it works is, if you're putting in $1,000 to have this bot trade, say Shiba, buy low, sell high, or whatever, it could trade that 5 or 6 times a day, or 500 or 600 times a day, depending on how the price movement is. Bitcoin, you probably use a bot to scalp that for a couple $100 a day, maybe, but you'd need to put in a considerable amount of money. So, but you'd also need a dedicated computer to run that bot 24/7, 365. And, I mean, I might end up trying it out here pretty soon. I don't know,
Okay.
just for fun, just to see how it works.
That there's a lot of people doing it, and I've been watching it here and there, and I know that they're making money at it apparently. So I was kind of wondering, if you get your bot right, I mean, you could fly to Tahiti and sit on the beach, right?
Right, yeah. It's pretty much an unpaid employee for you working. There you
Yeah,
go.
yeah,
That's how you can look at it.
You could take it with you, but I suppose that if it takes a dedicated computer for each bot, you could have 4 or 5 laptops running all at once, right? Do you have to have a special CPU for those?
Nah, just
Does it
any,
have to be Windows?
just any computer that can run anything. They can probably run on Linux too, which would be, and then you could run multiple different versions of it at the same time, probably. I don't know exactly how they would work, but I wouldn't say you'd probably need 5 or 6 different computers. You could probably run different instances of them and then have each instance doing its own thing, have it connected to a different account, or maybe they're all traded on the same account. I don't know exactly how it would work, but since they're bots and they're automated, they're doing this. They could be doing it 100 times a second. Every nanosecond they could be trading, or every second they could be doing one trade. And then 1, 2, then 60 seconds you've done 60 trades
Yeah.
and made $1, $2, $3, whatever.
Nano.
Yeah.
Yeah, that's interesting. So, audience, a quick reminder here. You're listening to Cryptocurrency Odyssey, airing live weekly on KWRH 92.9 FM on Fridays at 10 a.m. in St. Louis, Missouri, and nationwide on Zeno FM, with your city in there, like Zeno FM / Utah. Utah City. I couldn't think of another one for that. Monday to Friday at 11 a.m. and 4 p.m. If you like what you hear, of course, and would like to sponsor us, please give me a call and let's talk. It's a free consultation. You can also contact us on YouTube. Just search for Cryptocurrency Odyssey and subscribe, and then like the videos, and you can leave a message there, a comment to get in touch with you. That's all there is to it. Now, we do have a coin you can mine with an Android phone now. You can get the coins at a low price. They're already on an exchange, and then you can hold on to them. It's a special one called Loop, and it's put out by the Loop Network. You can work it for a year. It's on the Bitmart exchange, and you can call or text us at 314-283-1969 or 877-212-1400. And again, another option is you can email me at mlcryptodude@gmail.com, and I'll email you the link. So let us know what you think of that. And we're coming up to the end of our first half here. We're going to continue on, of course, after the break. and stick around.
Yeah, we'll be talking about dollar cost averaging.
Commercial Energy Consultants is a 10-year-old company focusing on middle to large commercial accounts. CEC offers these companies services by lowering their electric and natural gas rates. They don't charge for this service, and they've got over 9,500 happy clients with over 1 billion kilowatt therms under contract. What makes them different is their reverse auction. CEC offers a way to have available suppliers in 17 states bid openly for energy business. Why, their mission is clear. Bring their clients the low bid for their energy consumption. In fact, because of their competitive auctions, energy consumers would be well advised to consult with CEC first. Why pay more for the exact same power? For more information, contact Mike Grimes, CEO of Commercial Energy Consultants at 1-877-212-1400. That's 877-212-1400.
Hey, listeners, saying thanks to your customers is nice and polite, but expressing your gratitude in memorable and ongoing ways can boost your business. At Promo Experts LLC, we exceed our customers' expectations. For over 20 years, our product knowledge and experience has helped them with their marketing initiatives and trade show graphics. We are happy to put that experience to work for you. Quality products, great customer service, and prices are our #1 priority. We work with you to find unique, creative, and new ideas that fit your image and expectations, helping you build strong relationships with your customers. When you select Promo Experts as your marketing partner, we help you to see more than the big picture. For more information about this exciting opportunity, contact Diane Carson, President, at 636-458-5241. That's 636-458-5241. Let Promo Experts help you to move your business brand beyond the bland.
Attention! Here are 5 things that you can do to avoid coronavirus scams based on the Federal Trade Commission guidelines. Number 1, do not respond to text messages, emails, or calls about checks from the government. The government never sends emails requiring that you do anything. Number 2, ignore online offers for vaccinations and home test kits. Number 3, hang up on robocalls. Scammers are using illegal robocalls to pitch everything from low-priced health insurance to work-at-home schemes. Number 4, watch for emails claiming to be from the CDC or the WHO. Use sites like coronavirus.gov or usa.gov/coronavirus to get the latest information, and don't click on links from sources that you don't know. Number 5, do your homework when it comes to donations. Never donate in cash, by gift card, or by wiring money. For more information to help you be prepared, contact Tony Zifilopoulos. He's a 25-year IT professional with the last 6 years specializing in cybersecurity. Tony is a certified information specialist auditor, and he will review your cybersecurity. Tony can be reached at 314-504-3974. That's 314-504-3974. And email TonyZ@fixvirus.com. His website is www.fixvirus.com.
Have you always wanted to write your own book but don't know where to start? Publishing Concepts, a publishing company located right here in St. Louis, offers everything from consulting, book printing, copyrights, ISBNs and barcodes, print book layout, ebook and iBook layout, graphic design, cover design, ghostwriting, typing and editing, distribution, marketing, and more for an affordable price. Visit PublishingConceptsLLC.com or just Google Publishing Concepts to get started today, or call 314-781-8880. That's 314-781-8880. Publishing Concepts. We help you sell more books.
How would you like to get cryptocurrency free on the Cryptocurrency Odyssey radio show? Loop Network is crypto money based on a mobile-based system that brings a different perspective to the crypto industry. The mining experience is playful and straightforward, making it easy for everyone, regardless of background or previous knowledge of the LN industry, to be able to earn LN just by tapping a button on your phone. The best part of the concept is that it's entirely free to get started and mine LN. Just download the app. The Loop Network app will allow you to start withdrawing mine coins from the 1st of June 2023 and provide a secure system for players to make transactions and see your balance transactions history where transactions of your LN coins can be monitored. To sign up for this free offer and join the crypto world today, call or text Matt Leach at 314-283-1969. That's 314-283-1969.
Hello, listeners. We're back. We're here at Cryptocurrency Odyssey, where we give you the tools to make money with cryptocurrency. And we want to continue on with our current story about more cryptocurrency strategies. Right now, we're going to talk about dollar cost averaging, where it comes to finding the perfect entry point. Noah, you want to go ahead with that?
No.
Okay.
All right. So dollar cost averaging is when you're taking money and you're putting it into either a crypto or a stock or whatever.
Okay.
Every week, or maybe every day you do a small little transfer of $5 or $10 or whatever it is. And the reason for it's called dollar cost averaging is because that's exactly what you're doing. Is you're averaging, you're either averaging down or you're averaging up for whatever you're buying. All right, so you're betting over the long term pretty much with buying up every week or every day or every month or whatever you're going to buy. You do like one buy a week or one buy a month or something like that, which is actually a really good way to get into the more expensive cryptos, because then you're not like dumping $100 into it 1 week, or you're not dumping $1,000 into it or something like that. You're doing something that's affordable for you. It's a way to slowly build up your portfolio as well as slowly build wealth for yourself. But the problem is that you'll have to have a entry and exit point for those for buying. Like when people go out there and they buy, when they do a dollar cost averaging strategy, they don't really worry about how much it costs them, because they know over the life of their strategy or whatever they're going to do, or when they're going to sell or whatever like that, they know that they're going to be getting technically the best price, so to speak, for the crypto or the stock that they're going to be getting at, because as it fluctuates, you're buying the same amount no matter what. If you put down $100 a week, you'll be buying that same amount every week. So if the price of the crypto goes down and you buy $100 worth, good for you. But if it goes up and then you buy $100 worth, well, now you've averaged out to let's say you bought a crypto at $1, then it goes up to $2. Well, now your average over the course of 2 weeks would be $1.50 per share or per coin, right? And then if it goes down again to like, let's say $1.75 the next week, and you buy another $100 worth, now you're at like what, $1.66 or something per coin, so dollar cost averaging, if you is a good way to just slowly accumulate those coins, slowly accumulate that money in your account, so that way it's more manageable for you. And the best way, in my opinion, to do dollar cost averaging is just for long-term holding, of either a stock or a crypto, because you can do it any of these strategies that we've talked about, you can do on either or. It's pretty common practice for both sides of the crypto market as well as the stock market to do these types of things. And a lot of people, especially people that are new to doing crypto or the stock market, they do dollar cost averaging quite often, and it's pretty easy to do because you don't really have to worry so much about the price of something, because you're just averaging your price. So the only thing you need to worry about is in which direction the asset that you're trying to buy is going. And
Yeah,
you want
makes
it
a
to,
big difference.
yeah, obviously you want it to go up over time because that's how you're going to make your money. But, you also have to figure out, are you going to hold this long term or are you going to sell? In my opinion, if you wanted to go out to the stock market and look for something that's going to be great for long term holding with a lot of potential, well, then you should be looking at any cannabis company within North America. You should be looking at any of those because that's a emerging market and that makes the most sense, right? Everybody's buying into it right now because they know that there's a good chance that it might get legalized in the United States, which will open up opportunities for companies that are outside the US, like in, say, Canada, or companies that are in Europe to be shipping over to the US, et cetera, et cetera. And there's just so much growth potential in that particular market that if you didn't have the money to buy shares outright, you could just dollar cost average and you could do that every week until the market, or until they start taking off, and then you'll be probably changing your strategy to a day trade, where you're going to be buying and selling those stocks. But yeah, so that's what dollar cost averaging is just buying shares or buying cryptos on a weekly schedule or a daily schedule or a monthly schedule. And
You're just buying.
yeah, and then you're not worrying about the price because as it fluctuates up and down, your buying habit is going to average out your cost. It's either going to average down or it's going to average up or something. And if it averages down, that's good for you because then your total cost for each coin or share has gone down. If it averages up, well, that means that you're actually making money, but you don't really want it to average up too much because then your total cost is going up too. So
Now, should you do that with like an automatic bot that dips into your bank account and to make sure that you get that in there, or should you do it manually?
Well, you can set it up either way. You can set it up to, like, on Coinbase they make it super easy to do. I was having them take out money every week to buy Bitcoin for me for a little while. And I was just doing that because I figure if I get enough money in there, I can eventually, just hold it and wait for it to go back up to 60K again and make some easy money, and you can do that on Coinbase with pretty much any any crypto that they trade because they aren't securities yet.
Yeah, we don't know how long that's going to last,
Right.
though, right? Well, some of them are.
And,
I guess
Coinbase
is a security.
Huh?
Coinbase is a security.
Coinbase, the company is.
Right.
They're traded on the stock market, but the items that they trade in aren't considered securities as of yet. But
Well, I thought the way I read it was Coinbase was considered a security itself in crypto because of the crypto they traded.
The company itself is traded on the stock market, meaning that it's a security. The company itself is,
Okay.
their shares are, but the crypto isn't considered a security yet, although the SEC is trying to make it a security. So
Yeah.
they're trying to make crypto securities because they're trying to weasel their way in without having to create a new law or something will make it a security, and eventually they might win that, eventually they might not, but that's what dollar cost averaging is, and that's how you can use that to your advantage. But you need to as always, you need to do your research on whatever crypto you're going to buy or whatever security you're going to buy, because you want that to eventually go up instead of just staying stagnant or going down. Because dollar cost averaging is really great when you get for example, Sundial Growers did a reverse split, meaning that they consolidated their shares and my trading strategy got destroyed. So now my average price is fairly high for all the shares that I still have. So if I wanted to, I could do dollar cost averaging since the share price is below my current average price. I can do what's called averaging down, in which you buy more shares to lower the total price of your total average price for the shares that you already have, and that helps you to, in the long run, when it starts to go up, make more money. Because then your average price or your average cost of those shares has gone down, so you have a lower point to where the stock needs to get to before you start making nothing but money. So
Nothing but money, huh?
yeah, that's
That
a
would be
good way
nice.
to dollar cost averaging is a good way if a security goes south on you or a crypto goes south on you. It's a good way to, in the short term or long term, average down so that way you can start making money quicker. But of course that costs money, and that's not the goal. But if you plan on holding long term, then that's what you do.
I think it's a good strategy. Now, you were talking about cannabis companies doing the dollar cost averaging with. Is there any cannabis companies that are on crypto exchanges? Do you know?
Not that I'm aware of. I mean, there might be like NFTs and stuff like that in the support of the plant, but I don't know if there's any like cryptocurrency out there that's like geared towards cannabis or anything like that. But just, I'm just saying on the stock market side of things that it's
well,
an emerging market, and that's where you want to put money into because, well, one, it's fairly cheap for the most part. There's ETFs out there which are just funds that you can put some money into where and ETFs, I think we talked about those last week. You can go buy shares of an ETF or invest your money into an ETF, and what they do is they take their money and your money and they invest it into multiple different companies, stocks, bonds, based off of whatever that ETF is supporting. So like there's like a couple of cannabis ETFs out there right now that you can search on, like NASDAQ or the New York Stock Exchange or something like that. And you can put your money in there if you just want to get an all-around kind of, good chance to make some money instead of putting it into a separate stock. But then, you're pretty much giving your money to people that are going to be managing your money for you. So,
Right.
You know.
Okay. Now, listeners, if you're just now joining us, you're listening to Cryptocurrency Odyssey, airing live weekly on KWRH 92.9 FM on Fridays at 10 a.m. in St. Louis and nationwide on Zeno FM Monday to Friday at 11 a.m. and 4 p.m. For more information, you can call me or text me, Matt Leach, at 314-283-1969, or you can call our 800 number at 877-212-1400. We do have a website. The address on the website is ccodweb.us, and that's https://ccodweb.us. You can watch our videos also on YouTube. Just search for Cryptocurrency Odyssey and subscribe and like the videos. And if you have any questions, you can also leave comments there. So stay in touch with us, and we'll keep on broadcasting more cryptocurrency information. So now my next question here was with everything that you already said, with all the different trading strategies, what are the upsides and the downsides of all these trading methods, and should you take a middle of the road approach, or be an extremist and go for the gold, or what?
Well, I mean, it's based off of what the person's trading strategy is, which I suggest you always have one before you even enter into a trade. You want to have a buy price that you want to buy at, then you want to have your sell price already figured out, and then you want to know how many shares you want to buy. You just don't want to go in there willy-nilly, and then you want to check out this company as well to see if they're a profitable company or they're not or whatever. It's also, your trading strategy should also be based off of your short-term or long-term goals, whichever one you're looking for. I'm thinking that in the short term, most people aren't going to become millionaires, so everybody should be looking at the long term. And then if you get lucky and become a millionaire in the short term, well, good for you. But really, I think the best option, in my personal opinion, is that people should be looking at long-term goals instead of short-term, because you'll probably make some money in the short term, but you're going to make more money in the long term, and that's what you should be focusing on.
And that's one reason to start out early, like when you're 18 or 19, because the long term, when you get to the long term, you'll have money to retire on.
Short term, you could easily make $8,000 in a day if you're lucky, but you got to be lucky. And then, that's considered, those short-term gains ain't going to get you very far, but you can take that money and then reinvest it and hopefully make some more money. But
you gotta repeating.
You gotta know what you're doing to do that. So I would say that if you're gonna do day trading, the things you need to focus on are your technical analysis skills, because you need to be able to tell when the markets, or when a stock or a crypto is going to turn, so that way you can buy in at the lowest point possible and then turn around and sell at the highest point possible before it turns again, and you end up losing profit. So
that's the name of the game.
Yeah, those are the things that you need to know in order to be successful. You also need to know, and if you're going to be studying technical analysis, then you need to know what every single one of those, the chart, what the chart looks like, and what things like cup and handle mean, inverse head and shoulders or head and shoulders, all that.
Right, the trading patterns.
Yeah, you need to know all those patterns really by heart, or have a see, like for my computer setup, when I'm trading stocks or cryptos, I have two screens. And when I'm doing like Unity tutorials and stuff like that too, I like to have two screens. That way I can always have my trading up here on one screen, and then on my second screen I will have like my technical analysis stuff on that screen. And then I will probably also have it split in half, so that way I can have my definitions of what each thing is right next to it, because my technical analysis isn't that great, but it's okay enough that I can see when a company has potential. But like trying to figure out my sell point or my buy point, I'm getting better with that, but it still takes a lot of time and a lot of learning and a lot of practice, because it's not something you're going to pick up on in a day or two, unless you're some sort of
technical genius.
Yeah, technical genius for the stock markets or the crypto markets. But as we all know, trying to do technical analysis on crypto is next to useless. So
because of the volatility.
Yeah, if you can figure out the chart, then you might have a chance at scalping, for instance. But let's see here, range trading, you just need the ups and downs of that, or that you're only giving yourself so much room to play. So when you're doing range trading, your technical analysis needs to be on point, and it's highly volatile because you're trying to buy low and sell high within minutes. So you want to make sure that within those few minutes that you're going to make money and not lose it, because if you lose money, then, well, you're not doing too well.
Right. We're not here to lose money.
Scalping's the same thing. Your technical analysis needs to be great, but since you're really looking for unusual volume in a stock, your technical analysis doesn't have to be amazing. It just needs to be good enough to know, is this a good buy point? If you want to scalp something, you want to buy it low, and then you want it to sell high because of the unusual volume, and make 20, 30, 50, $100. Let's see here. What else? High frequency trading. There isn't much for that kind, because you're just using a bot. So, there isn't much to do there except make sure that your bot is up to par and that it's doing what it's supposed to be doing. And I encourage you, if you're thinking about doing high frequency trading, I encourage you to do several Google searches and read up as much as you possibly can.
Well, sure,
and
yeah.
make sure that you are understanding what the risk is, because it is extremely high.
Yeah.
All right. Dollar cost averaging, we just talked about that, and I think I've pretty much covered that one already, so I don't think that there's too much in there that I could say or expand on.
Mm-hmm. Okay. Well, that's that sounds like a good synopsis of what's going on, and then when it all comes down to it, you pray.
Right.
You pray a lot. So anyway, just to alleviate the tension in this room, because there's so much, I got a joke for you. Superman moves all his Bitcoin investments into a regular mutual fund when the sun sets every evening. And you know why?
Dollar cost averaging?
No. He tries to protect himself from kryptonite.
Oh, geez.
That's a good one, huh? You like that? Okay. So what I'll do here is, after all our talk here with the different strategies, I want to give a tip. The tip of today basically is what we were talking about, is learn to manage risk. Some people offering crypto trading tips might not have your best interests at heart, so don't get stung making the same mistakes as others. Set limits on how much you invest in a particular digital currency, and don't be tempted to trade with more money than you can afford to lose. Cryptocurrency trading is a high-risk business, and more traders tend to lose money than don't. So that's probably not good news, but it is the news. We're coming to the end of our day here with cryptocurrency, and I want to touch base with you and let you know that we'll be back here next week, and that wraps up the show pretty much. We hope you enjoyed the new show, and tune in next week when we continue to explore the world of cryptocurrency. Have a great week, and remember, don't take any wooden crypto.